do you have any tips on trading Bitcoin and crypto that fall somewhere between diamond hands, which is holding forever, versus trading every day? Not everyone has the time to be a fully active trader, but not everyone's dumb enough to just buy and hold forever and not move once.
Yeah. So yes, that can be done, and that is done all the time with our process. I would say it's kind of what I do as well, for the most part, is right. So you just hear what we're kind of saying, right? If we're saying there's higher volatility coming, the market is getting closer to a VIX of 20, 25, right? That's when you start to see a little bit, you see markets start to go down. You start to see more bearish trends, right? And then that's where a lot of people use us, is to get those trends, and just in case we're getting out before there is a larger, most of the time, crash or a larger drawdown, right? So versus now, what you're hearing us, Keith say, all of us say, is there's lower volatility, quad 2, belong of Russell. We haven't said the Russell in 2 years. Large cap growth, stuff like quantum. That's the complete opposite of B in safety, right? So my point on this is essentially listen to what we're saying, and yeah, if you don't have to trade, like market's down 0.3%, you don't have to trade the 0.3% if you don't want to, right? You can just be listening, okay, they're not concerned about whatever this PPI number is. For me, I can just keep going on my day and just hold whatever the longs are that this person has, right? Versus if we were like, oh, this is the beginning of the end or something along those lines, then that's when maybe you, who wants to not touch it every day, might start trimming some of your exposure, right? So you can use this process for anything. Just listen to what we're saying, gauge your listening towards how your portfolio actually is, and you'll be okay. Some people are freaking out on PPI, right?
Yeah.
Higher than expected, inflation's coming back, no more rate cuts is probably what the headlines are going to be, right? What I'm saying is, if we're coming out and saying, yeah, no more rate cuts, you can see a little bit of a drawdown, higher volatility is coming, that's us being a lot more bearish, right? So that's when, if you're not trading every day, right, you're probably long, right? And so if you're not trading every day, and we're just talking about higher volatility, you would be decreasing your exposure, right?
Okay.
For the non-day trader type of person. Where what we're actually saying is, okay, yeah, PPI is higher. People are still pricing in rate cuts. We're not expecting all these rate cuts to come out just yet. You're still safe, right? And by reiterating our longs of quantum, Ethereum, Bitcoin, etc., then that person who's not trading every day can hold on to their longs, right? So it's training your listening towards the duration and how often you're trading, right?
Yeah.
Based on what we're saying. Does that kind of make sense?
I think that's a great answer. Yeah, kind of adjust your portfolio and positioning based on how we're filtering through all the noise and data.
Right. So like John, go to slide 16. Okay. Here are the signals currently. You have bullish, 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 neutral, bullish, right? You don't see a single red thing in there.
Just one.
Right. You have one in marathon. That is a very bullish signal, right? For this person, so again, this person is asking, I don't trade every day. I trade maybe once a quarter, right? Or I'm just waiting for a large downturn, getting my capital out, and I'll get back in. That's what that person's asking. For that person, right, for you to get your capital out, right, you're gonna start seeing neutrals pop into more neutrals. You're gonna see more bearish signals, right? Everything's not gonna be bright greens, right? That's when the signals are front running any type of drawdown. Does that kind of make a little bit more sense? Like you can literally, for that person, you're a longer duration, look at the trend line because that's a longer duration. And you're seeing a lot of green. Green is good, red is bad. Not seeing a lot of red, it's pretty good.
Thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.